Well, the big headline today has to do with the inflation rate in the United States. The Consumer Price Index report was released this morning, and it shows that the annual inflation rate hit 2.3% in April, and that's less than expected and the lowest since 2021. And I received some couple comments yesterday to the show where a couple of viewers said, we don't want to hear about the stock market as much now. We want to hear about, the real impact to Main Street of what's going on. And so we talk about impact to Main Street. And again, you got to take the data at face value or not. But the figures show that in many, many categories, the acceleration in the price of items is starting to moderate. That should have a follow-on effect or a knock-on effect for Main Street, right? For consumers, middle and middle-class consumers, less income consumers, right? This should have a positive effect. So good news, right? It says the Consumer Price Index, which measures the cost of a broad range of goods and services, rose seasonally adjusted 0.2% for the month, putting the 12-month rate at 2.3%, again, lowest since February of 2021, right? So 22, 23, so over 4 years, okay? It says the monthly reading was in line with the Dow Jones consensus estimate, while the 12-month was a bit below the forecast. So it actually beat what the economists said. Let me pull out and tease out a few of these specific items that I think apply broadly to all of us because I think this is good news. It says the shelter inflation was at 0.34% month over month and 3.99% year over year, unchanged from a month ago and the lowest since November 2021. Rent inflation, 0.27% month over month and 3.98% year over year, down from 3.99% in March and the lowest since January 2022. How about egg prices? Eggs have been a hot topic of discussion because they have skyrocketed so much over the past year or so. Egg prices plunged 12.7% month over month, the biggest month over month drop since March 1984. Now, we got to keep that in perspective because they've risen, 50, 60, 70%. But the prices are coming down on some of these things. Headline CPI again down to plus 2.3% year over year. Listen to this. Real average weekly earnings rose 1.7% year over year, and that's the best growth in wages since March 2021. Now, the naysayers are out, spinning this good news, saying, well, we're going to see a resumption of the inflation next month once the effect of the Trump tariffs are priced in. So that's what they're saying is that the lack of tariff inflation is transitory. Lack of tariff inflation is transitory, meaning that it'll rear its ugly head next month. Let's see how that plays out. For now, this is pretty good news, and it should be good news for mom and pop. It should be good news for business owners, consumers, lower and middle income, earners for sure. And again, leave your comments and thoughts below. I'm sure many that just disregard any mainstream data are going to say, hey, it's not coming down. We're feeling pain at every point, every price point in the economy. It takes time, right? But again, would you think at this point, or do you believe that progress is being made in the right direction? All right, so that's the inflation report, CPI, from today. Stock market finished mixed. Dow was down a bit. NASDAQ got a nice bump. Gold put on about $12 an ounce gain. I saw the dollar did weaken a bit today. Remember yesterday it had gone pretty strong. It did weaken, pulled back about 0.75% today, the U.S. index. The 10-year bond yield came down about 0.2 basis points, okay? So let's talk about a topic I do not discuss very often on the channel. I am into this area, and that's cryptocurrencies, and I do believe in them as a diversified investment strategy. Not trading advice, not financial advice, or anything like that. It's just what I do. I saw a comment from Peter Schiff that came out, I believe, today, where he continues to say that Bitcoin is a scam and gold is the only way to go. As you all know, if you watch this channel for the last year and a half, I'm a big believer in holding gold and silver as part of your financial portfolio. That's what I do in the physical form, and a big proponent of that. But I also have been doing a lot of research recently, more so since the new administration took over, and we have a changing of the guard across the board with regard to cryptocurrencies, and the fact that there is going to be some regulation imposed, which gives financial institutions, corporations, banks, hedge funds, all this more, let's say, momentum to believe in crypto as something that can be offered certainly as investment strategies as part of a portfolio. And that is going to, like it or not, believe it or not, that's going to push massive liquidity into the cryptocurrency market. And hence that is going to cause at least the main cryptocurrencies, not talking about meme coins here, okay, but the main cryptocurrencies. And from my perspective, we're talking about the Bitcoins, the Ethereums, the XRPs, the Solanas, things of that nature, to probably have a substantial price increase. Again, not trading advice or financial advice, but I've been doing a lot of research on it and I'm paying attention to it. So here's an article I just pulled up today from Zero Hedge. Bitcoin treasury exposure goes mainstream as Coinbase soars on joining the S&P 500. So for those of you that are just stock market gurus, this is important. You now have a cryptocurrency exchange, Coinbase. And by the way, if you guys don't know what that is, Coinbase allows its users or customers to basically buy, sell, and trade cryptocurrencies on its exchange, ones that it does list on the exchange, okay? And now, apparently, this Coinbase is going to be joining the S&P 500. All right, now, of course, Coinbase shares have skyrocketed on this on this news. Let me share with you the article and weigh in. Do you guys agree with Peter Schiff, who I always have liked and followed for many, many years, that he believes that Bitcoin is a scam? I disagree with him on that front. I think that the system is moving this direction, like it or not. Will there always be a place for gold and silver? Absolutely. Okay, it's real money, thousands of years. But we have another sheriff in town, a new sheriff in town, and you have massive, massive amount of buying by wealthy people, corporations, sovereign wealth funds, other countries, other central banks, foreign central banks. And you have the United States also out now saying that their goal is to acquire 1 million Bitcoin. You have MicroStrategy that has now almost 600,000 Bitcoin. You have Capital 21 or 21 Capital coming online now saying they're going to implement a similar approach to what MicroStrategy is doing, and they want to accumulate 1 million Bitcoin. You have a company over in Europe now that's going to mimic this. You're going to start seeing more corporations realize that if they get into this space, that their stock is going to go up. Okay, so this is big time. On March 19th, 2025, Coinbase will officially join the S&P 500, widely regarded as the most trusted, most tracked equity index in the world, with over $5 trillion in assets benchmarked to it. The S&P isn't just a measure of corporate strength, it's a gravitational center of global capital allocation. And starting next week, it will include a Bitcoin treasury company. Coinbase currently holds 9,267 Bitcoin on its balance sheet. That's valued at $963.8 million at today's price of $104,000 per Bitcoin. If you're not following it, Bitcoin just about a week or so ago was at 94,000. About 2 weeks before that, it was at $78,000 or $79,000. So it's making a move. All-time high, I think it's about $109,000. You've got estimates out there from mainstream crypto people and people even on the outside saying Bitcoin's going, to $250,000 this year, maybe even higher. So the Coinbase will be the 9th largest public corporate Bitcoin. No, Coinbase is the 9th largest public corporate Bitcoin holder globally. Okay. It says, as Nick Ward reports for Bitcoin Magazine, this marks a quiet turning point for Bitcoin and capital markets, one that reframes the treasury conversation and reshapes how companies think about index eligibility, institutional flows, and balance sheet strategy. So it says Coinbase's addition to the index means something profound. Millions of investors will soon have indirect exposure to Bitcoin, and they didn't choose it, it says. Because the S&P 500 is tracked by passive strategies, funds and institutions must purchase Coinbase stock in proportion to its index weight. If Coinbase is assigned even a 0.20%, 20% weighting, that implies more than $10 billion in net inflows from index tracking vehicles. Okay, Bitcoin exposure, it says, is now compatible with the highest standards of institutional eligibility. All right, that's according to this article. So does that comport with Peter Schiff's statement that Bitcoin is a scam? Okay, that is a rhetorical question for your input and thoughts. It says strategy may be, we call it strategy, MicroStrategy, Michael Saylor's company. Their only goal is to simply acquire and hold forever as much Bitcoin as they possibly can acquire. Right now, they're just shy of 600,000 Bitcoin, and their goal is to keep buying up as much as they possibly can. The shares of, do the research on this, the shares of MicroStrategy or strategy have gone up a lot. Okay, I think it's thousands of percent in not too long a period of time. Coinbase may be the first S&P 500 company with a Bitcoin treasury, but it likely won't be the last. We're talking about, copycats now, other companies doing the same thing, mimicking what MicroStrategy is doing, and this is just the beginning. Okay. Perhaps notably, Strategy is the largest corporate Bitcoin holder in the world by far. Its Bitcoin is valued, it holds 568,840 Bitcoin, valued at $59.16 billion. So what does this do? This is what the article says. Coinbase's entry and Strategy's potential follow-on reinforces an emerging thesis. A Bitcoin treasury can enhance a company's capital profile, not detract from it. Okay, and as more corporations start to see this, they're going to jump on the bandwagon. Visibility provides perpetual exposure to new capital, flows, passive funds are forced buyers, providing liquidity and price support, and perception. Bitcoin is no longer a reputational liability. It's becoming a marker of long-term vision and resilience. Okay, so anyway, I won't go too long today. I think that you've got to look at this for yourselves, for your family, for your long-term capital appreciation, see if it's something that makes sense for you. I'm not saying go out and buy Coinbase stock. I'm not telling you to go out and buy Bitcoin. I'm not telling you to do anything. I'm just saying do some homework on it. I've always been closed-minded about the cryptocurrencies, but with the new administration coming in, I said, this is something I just can't keep ignoring. You're going to have mainstream adoption, and look what's happening, all right? It says, what comes next? Bitcoin is entering the core portfolio. With Coinbase's S&P 500 inclusion and Strategy potentially next, the implications are clear. Number one, Bitcoin is no longer confined to speculative portfolios. Number two, Bitcoin treasuries are now appearing in default asset allocations. And number three, the passive indexing era is now passively onboarding Bitcoin, whether the end investor realizes it or not. It says Bitcoin on the balance sheet is no longer a bet, it's a bridge. Love to get your thoughts on this, guys. I'm going to start covering the cryptocurrency space more on the channel. Hopefully you will keep an open mind. If you are a nothing but gold or nothing but silver person or nothing but stock market person, if you're a stock market person, you've got to be looking at this now just in terms of what is happening, what the transition that is taking place in the financial marketplace. Thanks for watching. Thanks for hitting the thumbs up button for me, the like button. Subscribe, please, if you're not subscribed. And I'll talk to you all soon, okay?